This is not financial advice. I'm recording my thoughts about Amazon stock. I'm going to do two versions, one long version and one short version of this video. The short version will only include the valuation. The long version will include the details of the business model as well as the financials. Let's get started with the video. Amazon stock is currently trading at about $102 with a market cap of about $1 trillion. In the past 5 years, the stock only grew about 34%, whereas the S&P 500 ETF SPY grew about 55%. That's almost 20% underperformance from Amazon stock. And now the question is, if I invest at $102, can I get a good return in the next 5 years that can beat the SPY? That's what I'm going to talk in this video. Let's look at Amazon's business model. As you can see on my screen, Amazon reports its revenue in 3 different segments. One is North America, second is international, and the third is AWS. AWS, as we know, is the cloud service, and North America and international include multiple sub-business segments like their online stores, physical stores, third-party seller services, subscription services, etc. Let's now look at how each business is doing. Let's now look at AWS. AWS made about $80 billion of revenue in the past 1 year, and the operating income is incredible. It's about 30% operating margins. So they made about $23 billion of operating income. But one thing to note is that the growth has decelerated. It was growing at about 30% year on year, and in the last 1 year, it only grew about 20% year on year. The operating income has reduced by 2%, and it's actually 10% down if you adjust for the foreign exchange. And one thing I would like to say is that this year and the past 1 year, the cloud spending has significantly come down in the industry, but in the next 1 to 2 years, it has to come back because the cloud industry itself has been growing at about 18% CAGR. So since Amazon holds about 35% of the market share, the total market for cloud is about 220 billion, and Amazon is making 80 billion. So that's almost 35%. So AWS is clearly a leader. When the industry is growing at 17 or 18% year on year, AWS should grow even faster. So I'm thinking 25% should be reasonable for this business in the coming years. Yes, this year it's not doing good, but it's going to do better in the coming years because cloud services are not going to slow down. Amazon has been making a lot of money in AWS, and they're using this money to cover for the losses that they get in the low margin e-commerce business, and they're also investing a lot of money in the infrastructure for the supply chain as well as coming up with the same day shipping service. So we're going to talk about that more. Let's look at the North America business. North America, they made about $315 billion. It represents about 60% of their revenue, and the total operating loss is about $2.8 billion. They used to make slight profit in North America sector, but this year they're only making $2.8 billion of loss. The net sales are up about 13% year on year, but their operating loss has increased significantly. This is because they have been working on the same day shipping service, which takes up a lot of money. It's one thing to have 2-day shipping service, but if you want to have same day shipping, that's an exponentially hard problem, and somehow Amazon is trying to achieve that. But in my opinion, I don't think I would pay extra for a same day service. I can wait for my product for 2 days. I personally don't understand why they're doing that, but we don't know. It may yield better results than the 2-day shipping, right? So I have to wait and see what that's going to do. But for now, the business is not doing great, and e-commerce is like a hamster wheel business, as I like to say, because you have to constantly invest in the infrastructure, supply chain, and they also employ about 1 million plus people who needs to get paid, right? And the transportation costs are significantly high now, and then they use UPS and FedEx for almost 80% of their shipping, and the shipping costs are also significantly high. And I can recall the other day when I ordered 4 different products, each of them worth about $5. They all shipped from different locations, like one from California, one from Illinois. So I don't think they made money off of that transaction. They probably made a significant loss. All I do is pay about $20 for my Prime subscription, and I also get the Prime music and a lot of content for free, right? So I can see why they're making significant losses, and I would love to see them make profit. But Amazon ads, which I'm going to discuss in a little bit, gives me hope that this e-commerce business can get profitable. But now let's move on to the international business. International e-commerce sales are down about 8% year on year, and operating loss is down 37%. They made about $118 billion of revenue, but they lost $7.7 billion. So the loss is about 7%, and that is significant. And I don't think they can make profit in the international segment even in the next 5 to 6 years. Look at the free cash flow for the past 12 months. As you can see on my screen, their free cash flow has been negative for the past 1 year, and that's one of the reasons the stock is down significantly. They're not able to purchase their shares back, as I can show in the share dilution part. Now let's look at the outstanding number of shares. Companies like Apple, Microsoft, Google, they have a lot of free cash flow, and they buy their stock back significant amounts, like 3%, 4% year on year. And for the case of Amazon, that's not happening. They're not buying back because there is negative free cash flow. The outstanding shares increased slightly from 10.4 billion to about 10.6 billion. And they are saying that they will try to efficiently manage this dilution, but we have to see how they're going to perform in the future. When I look into Amazon's balance sheet, they have about $70 billion of cash and cash equivalents, but I cannot give them too much credit because their long-term debt is about 140 billion, right? So that's a significant debt that they have when compared to companies like Google, who has $110 billion of cash and only 27 billion long-term debt. If Google wants to, they can pay it off immediately, but that's not the case for Amazon. So even though they have $70 billion of cash and cash equivalents, I'm not going to get too much excitement on that. Now let me talk about Amazon ads, which is a significantly profitable business. As you can see on my screen, Amazon ads make about $31 billion, which is only second to Google, which makes about $69 billion. And in 2022, this is for 2021 and 2022, they made about $40 billion. And ads, as we know, is an extremely profitable business. And Amazon is expected to make about $60 to $65 billion of Amazon ad revenue by 2027. And that's going to have significant margins, and that can offset for the losses that they make in the e-commerce business and show a net profit eventually. So Amazon ads give me hope for their e-commerce business. Let's look at the valuation for Amazon stock in 2027. I'm going to do two cases. One is a base case and another one with great execution. As I said before, Amazon makes its revenue in 3 different revenue segments broadly: international, North America, and AWS. I'm going to analyze AWS separately because it's a very different business. I'm going to evaluate international and North America together because they are both very similar businesses. As you can see on my screen, in 2022, AWS made about $80 billion of revenue, and I'm estimating a growth of 22.5% for this business. As I said before, even though they only grew 20% last year, the CAGR for the cloud business itself is about 18%, and Amazon is the market leader with 35% market share. A lot of companies cut their cloud spending this year, but it has to come back next year or the year after. So I'm going to assume 22.5% revenue growth rate for the next few years, which I think is reasonable because AWS is a leader in its sector. With that, they can make about $220 billion of revenue in 2027. And I'm going to assume a 25% net profit margin for this company, with which they can make about $55 billion of net income in 2027. And for a company that's growing in 22.5% and 25% net profit margin, I can assume a multiple of 25. But since AWS is a leader and they have a huge lead when compared to their peers, I can give it a premium multiple of 27.5, with which AWS will be worth about $1.5 trillion in 2027. With respect to number of outstanding shares, as I said before, Amazon doesn't have significant free cash flow. Even if they have free cash flow, they're spending on something else. So they're not doing active buybacks like Apple, Google, or Microsoft. So I'm going to assume that the share count is going to stay flat, no buybacks. So I'm going to assume 10.62 billion outstanding shares even in 2027, with which Amazon Web Services would be worth about $143. And in the e-commerce business, as I said before, we are going to analyze North America and international together. The total revenue is about $430 billion. And the estimated growth rate, I'm assuming 10%, because the North America is growing at about 15% plus, and international growth is actually negative, like -7%. But I'm optimistic that things are going to get better in the coming years. That's why I'm assuming 10% revenue growth for this company, with which they can make about $692 billion of revenue in 2027. With respect to the net profit margin, I'm only going to assume 7%, because as we all know, e-commerce is a very low margin business and Amazon's gross margins are in the teens. And as I said before, I'm counting on Amazon ads to offset for the loss they make in the other segments like online stores, physical stores, etc. So 7% I think is reasonable, and with that they can make about $48 billion of net income in 2027 from the e-commerce business. And since the growth is only 10% and net profit margin is only 7%, the multiple should be about 10. But I'm going to give it a cash cow multiple of 15, because I have to pay a premium for Amazon's e-commerce business, because they have about 40% market share and that deserves a premium, right? So I put a 15 multiple on that, with which the e-commerce business will be worth about $727 billion. The share count is going to stay the same, 10.6 billion, and with that, the e-commerce business would be worth about $68. So when I combine the $143 AWS and $68 e-commerce together, that will result in $211 stock price in 2027. And in my opinion, this base case is slightly on the conservative side, because I think people are going to pay a better multiple for these businesses, and also Amazon can achieve better profitability because they already know that their stock is underperforming and they are cutting on their operating costs, and I'm counting on their CEO to make sure that their operating costs get cut significantly, and they can also do some automation and achieve more efficiency in the e-commerce business especially. So overall, $211 in 2027 I think is definitely achievable, and currently the stock price is about $102, right? So that's about 100% plus gain in 5 years, which is a very attractive gain. So now let's move on to the great execution case. I'm not going to waste your time on this. I'm assuming 25% growth rate for AWS, which I think still is reasonable, even though I say great execution, and no buybacks. I'm actually keeping the multiple same. I can assign a multiple of 30, but I'm keeping the multiple same. With that, $174 for AWS, and for the e-commerce I'm giving 10% net profit margins. I kept the 10% growth rate same, even the multiple is 15. So e-commerce would be about $98. So together $271. So that's about 2.7x in 5 years, which is a great gain. In conclusion, the base case valuation is resulting about $211, and the great execution case is resulting in $271 stock price for Amazon. And based on this, I'm a buyer of Amazon as long as it trades between $100 and $120. If it falls below $100, that's even great, but I'm a buyer at $102. Let me know your thoughts in the comments. Thank you so much for watching.